Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big VC funding. I'm your host, Greg Head, and this week my guest is Dave Yuan, the founder of Tidemark Capital, a growth equity investor, focuses on vertical SaaS companies starting at 5 million ARR as an invest to help them grow practically and successfully to scale up and be market leading companies with revenues of 100 million or $1 billion. He's done that before with some major industry market players that he's helped grow. Our conversation today is about what is changing this year through this summer with AI for practical founders, the companies he's dealing with that are scaling up and the prospective investments he's going to make. He's talking to a lot of founders out there. He runs a community of vertical SaaS founders, serious ones from all over the world, and he's seeing a lot. And I'm seeing a lot from the practical founders that I work with. So we're comparing notes on what's working, where are the opportunities, where are the threats, how to sort your way through it, and how practical founders can win in this fast-moving AI summer. Good to see you, Dave. Welcome back to the Practical Founders Podcast.
Thanks, Greg. Great to be here.
Yeah. You joined my 35 of my practical founders in my CEO peer groups in July to talk about what you're seeing with AI, your systems of action post and framework and paper that went out created a lot of discussion for founders in our groups, how to think about how the world is changing with AI. And I appreciate you spending time with our founders and answering questions and, digging in on that. It's been quite a year in software with AI this year.
Yeah, absolutely. And these sessions are fun, whether it's this podcast or your group, to really, put some thoughts out there and test them. That's what we're doing here, which is writing and speaking in order to refine our thinking. So it's always great. Lots changing, lots to figure out.
Well, you're an experienced investor. You've been doing this a long time. You're inside a lot of serious, scaled-up SaaS companies and public companies, and you're a growth equity investor, even in early-stage vertical SaaS companies. So you see a lot, and we'll talk about all the things you're seeing there, and what's the best way to share those insights with founders, because things are moving pretty quickly. The world isn't the same as it was the beginning of this year.
Yeah, and during these periods of time, I really like the opportunity that an investment firm and a community ecosystem have to try and facilitate learning and learning together. So I think this is a really great time.
I can second that. Our practical founders we had a meeting, group meeting this month for one of my groups, and a practical founders summit 2 weeks ago in Phoenix. We spent a whole day talking about AI. There's a lot of power in sitting with others, bringing in experts, and commiserating about how we're doing it, what's working. This isn't simple or easy right now. So you've got to, test your way through it, and it's working. So, Dave, why don't we just start with what is Tidemark Capital, and what's your focus, and how do you operate, and then we'll keep going from there.
Yeah, awesome. Thanks, Greg. Tidemark, we're a growth equity firm, and specifically, I'll talk about the investment strategy, where we like to invest, and then also, as you mentioned, a little how we work and what we're trying to build. We're Fund One, so we're a startup like many people on this podcast or listening to this podcast. But where we specifically play is we invest in software applications, usually 5 million ARR up to hundreds of millions, but usually kind of start at the 5 to 20 million ARR level and really help them scale. They found product market fit. They built one product with aspirations of multiple products. They're looking to flesh out their business model, expand internationally, scale their go-to-market, that kind of thing. We love applications that do have an opportunity to be a multi-product platform. We think that's where you can grow sustainably, grow profitably, build really valuable and important businesses. As a result, vertical SaaS has been a big focus for us. We love this idea of building for one end vertical, helps you build much stronger product market fit, gives you an opportunity to build that multi-product platform that I mentioned. And, per the conversation today, it's a real great platform to launch AI solutions. We don't care, candidly, who the shareholders are. We don't try and follow fancy early stage investors. We actually tend to like companies that haven't raised a lot of money. If they haven't raised any money, that's even better. That shows a scrappiness and a real understanding of their customer and the product solutions that they're bringing to market. And maybe the last comment I'll make is I started Tidemark with this idea of building a firm around the energy of ideas. Those ideas are really fostered and enhanced through the power of community. And so what we think of Tidemark is not only an investment firm, but we are really trying to build a community and ecosystem. So we do a lot of things like what you do for your practical founders, which is publish frameworks, host events with world-class executives, our Tidemark fellows, publish benchmarking studies, a variety of different ways of really supporting the ecosystem. And it's both the ethos of the firm, but also, frankly, it's a pragmatic approach to how to build a firm, which is you're trying to add a lot of value to a big group of like-minded entrepreneurs. And over time, those entrepreneurs might want to raise money, whether it's for secondary, whether it's for acquisition financing or primary. And we have a built-in trusted relationship before working together. So that's sort of Tidemark in a box.
Right. Well, can you distinguish for listeners what makes you growth equity and not venture capital, and what makes you growth equity and not private equity? These terms are blended or, and easily confused.
Yeah, they're blended and the lines are blurring, but at a high level, early stage investing is really backing a great entrepreneur and her idea, and maybe a little bit of customer traction, and placing a bet that if you get it right, you can hit a 10x, 100x, and pay for the things that you get wrong. So there tends to be like a lot of sort of big thematic investments where the risk of failure is very high. The rewards of success are also very high. And so you see a portfolio of kind of one or two investments that pay for the entire fund. The other investments don't go very well, candidly, right? Private equities is the other end of the spectrum, which is you're kind of buying a business that already exists, and you're not really necessarily looking to grow it a lot, although there can be some growth strategies, and we tend to work with private equity firms that have much more of a growth-oriented mindset. But it really is around leveraging up the balance sheet with debt, cutting costs, and really building out the full margin profile of what a business can be. And so that's more of like a harvest mode. And these are generalities, but I think they're for the most part true. Growth equity is the in between, which is you found some level of product market fit, and we help you scale your go-to-market. We help you scale your product operations and help you try and go win the category. And our return is really driven by helping these companies grow to realize their full potential. A lot of companies that we invest in are at 5, 6, 7 million in ARR, and they have maybe 2 sales reps. And we help them build a repeatable motion. We help them understand their rep profile. We help them build a repeatable go-to-market model where you go from 5, 6 million ARR to 40, 50, 60, 70, 100, multiple hundreds. And then using that growth and economic power of your business and your first product to expand it to multi-product platforms. So that's a little bit more of what we do. And again, within vertical SaaS, there's each end market is quite different, but there's lots of pattern recognition in terms of both the product and the go-to-market journey.
So I'm hearing, VC is the big bets and most don't win, and private equity is the harvest mode. Growth equity is both a growth game and has a very high success rate. There isn't the churn that we see in VC, so you don't have to supercharge these companies with, funding steroids. Are your companies growing at let's say, healthy rates, 50, 75%, not 200% or something silly?
Well, look, we'd take 200% if it came to us.
Yeah, okay. Right, there we go.
And many of our companies aspire to grow at very, very high rates. But it's an economic discussion, right? It's you start out with a base understanding of return on investment. At steady state, you want to be investing $1 to get $1 of new bookings, as an example. Like that's one common metric, and of course these are organizations in motion. So you have you're building up your sales capacity. So there are new reps that are performing less well than existing reps, and so you can plug some of those productivity holes with primary capital. And so rather than waiting for everything to work everything to be at maturity, you can forward invest and go win the market. And so those are the types of discussions we have, but it's an economic discussion. And so we'll grow these companies as fast as economic and as fast as practical and pragmatic. But we are trying to grow these businesses and become the largest, fastest growing businesses with the best product and the strongest brand. So that is the mission for sure.
And can you talk about some of the companies who have scaled up of size in your portfolio or that you've invested in?
We are very fortunate to have worked with lots of companies that have grown over 100 in ARR, several over 500, a handful over $1 billion. Businesses like Toast, Clio, CCC, Service Titan, Zero, LegalZoom, Carbon, AgVend, OnFly, a number of different companies, Jane,
Yeah.
vertical SaaS companies that ultimately have won their category. So I feel like my job is one of the best out there. You get to work alongside these great founders and just be surprised what these businesses can be and how they can impact their industry. So it's a lot of fun.
Many of those names, the CEOs and the senior leaders who went through that journey, speak at your annual conference. What can you say about VSaaS Collective Live, your event coming up?
Yeah, so Collective Live is a in-person industry conference. It really isn't necessarily about Tidemark. It's really bringing founders and CEOs of vertical SaaS companies together. We started that as an experiment last year with 100 founders and CEOs, and we actually sold out in the first week of public availability. Greg, you were nice enough to support us with your community. We ended up having 132, which wasn't great for the fire marshals, but it made a great vibe. And the idea is really bring practitioners together to learn from each other. So we'll have a full day. We had a full day of sessions last year. It'll be bigger and better this year. We've upped the number to 250 CEOs and founders, and we're basically at capacity right now. It's an application process. It's zero cost. We do it as a part of supporting the ecosystem back to that community aspect. And what we have, like the best of the best. We have on the AI side, we'll have the CEO Podium talk about his journey in sort of building out agentic extensions to a traditional SaaS company. They're at multiple tens of millions of ARR in their agentic extension within the first 12 months. So incredible adoption in a way that complements the existing solution. So we have that discussion on AI. We also have Henry Shee, who runs the Lean product leaderboard. He studies the most profitable native AI companies out there in terms of measures them by revenue divided by the number of FTEs. So he's gonna share sort of observations of different practices where you mentioned a lot of your founders are growing more quickly with fewer headcount. That's the ethos of his discussion. He has a catbird seat in terms of looking across all venture-backed and bootstrap companies and really pulling out some great pattern recognition. We have the teams from Slice, Toast, CCC, SiteMinder, Fora, Moxie, Bill, just a number of great vertical SaaS leaders talk through how they've built their businesses. And so it's just awesome. It's awesome to get that group together. And it's something that we always love hosting. It's a lot of work, but after it's over, it's always super gratifying.
Well, I'll just make a recommendation to vertical SaaS founders out there that are just, up and running. If you're not up and running yet, you're strapped to the mast. Conferences don't make sense yet. But if you're up and running and you want to see what are the deeper frameworks and tools, not like quick wins and tactics, that like strategic approaches where little vertical SaaS companies grow into large ones. And there's some laws of nature of the modern vertical game that were shared last year. And 100% of the people in the room are vertical founders. These are your people. And there was a lot of great discussions there. It's not a sales pitch and so forth. So as far as I'm aware, it's the only vertical SaaS founder conference out there like that. And it's worth the day. So we'll have a link to that on the website. You can get it on the tidemarkcap.com website. And I'd encourage founders to go. It's in San Francisco, Ken, right?
Yep, that's right.
Yeah, so people came from all over for that. I met a lot of great founders. Some funded, most not, probably, of the ones I talked to.
Yeah.
Let's jump in. The topic of conversation that went through our peer groups is every month we're thinking about what has shifted in AI, how have we progressed in AI in all of our companies and my peer groups. These practical founders are making progress inside their business, in their product, and we're kind of working with each other to say, "Are you seeing what I'm seeing? And here's something I'm working on." You started your business focused on, as you call them, software businesses that own control points. They're
Mhm.
very sticky. There's systems of record. You can build add-ons onto them and we add payments and really become a center of the ecosystem. And then you've written a lot about the threat of AI and systems of action that could either surround or displace those systems of record. It's a very useful conversation for our peer groups, many of which are system of record, our founders, many of which are system of record type companies. Why don't you take us through systems of action and what you're seeing this year, with quote AI threats or opportunities for systems of record type companies?
Yeah. Maybe I'll just make a quick comment on what I'm seeing more generally in AI, and then we'll hop into
Yeah,
our
that's great.
framework.
Thank you.
Yeah. I think this summer is really the summer of belief. Experimentation is kind of over. Like I think whether it's yeah, I mean, like it's a remarkable, like it's been over the span of 2 years, right? And we get a lot of public SMB and vertical SaaS companies that reach out and want to do leadership sessions with our team. You have early stage companies, bootstrap companies, conglomerates. I think experimentation is kind of over. It's a real belief, and I think customers believe that AI is a part of the future. It may not be the only future, but it's fundamental to improving their operations. AI is software, it's product, it's
Yes, it's
more.
awesome.
It really is. So, it's fundamental operations. So I think that's something that I didn't want left unsaid because that is a big change. I think that's occurred over the last, call it, 12 months.
Yeah, all of our founders in the Practical Founders CEO peer groups are moving with AI and treating it as a big opportunity, watching very closely. They're experimenting little ways to get through it because it's not as easy to straight line ship a feature like you used to.
Yeah.
You have to nudge your way, into something practical and useful. So awesome. So has that changed your, I don't know, your investment thesis or the way you run your business now that we have this
Yeah.
new AI flavor in here?
Yeah, let me talk you through it. So I think you referred to this earlier in terms of our theory on control points. So the way we think about applications, both horizontal and vertical, I think it tends to be more acute and vertical.
Yeah.
Is There's certain systems that we call control points. They have, by nature of what they do for their customers, they have workflow gravity, data gravity, and account ownership gravity. Workflow gravity in that they manage and they automate the most significant, most valuable workflows. Maybe it's the workflows that touch the most people within an organization. Same thing with data gravity. By function of what they do, they manage the most valuable data around the most valuable resources like people and customers. They are the taxonomy which third party data gets integrated into, and so that's also a real area of strength. And finally, account ownership gravity, which particularly in a small business, and this can
Yeah.
happen with enterprise as well for functional leaders, but most small business owners want a single point or fewer points of accountability rather than more. And so those things allow the certain group of companies or certain group of categories that we call control points the unfair right to sell that next incremental product, because you want that product to integrate into all your core workflows so it can be one. There won't be any handoffs, there won't be any breakdown. It'll be a much more efficient process. Same thing with the data. You don't want unreconciled data. And finally, again, that single view of accountability. So single throat to choke is probably the the non politically correct way of saying it.
And
Um,
this is the system of record type companies, the super CRMs, the ERPs, the run your business kind of software that's very sticky. It's hard to sell, but once you get it in, it's hard to, it's hard to remove.
yeah, that's 100% right. So the system record tends to have the most data gravity, right? As it describes, it's the single source of truth, or it's the most true record. Sometimes there's a lot of noisiness in the data.
True.
There's also things like systems of engagement, where that's the workflow that people spend the most time. There are certain categories that are both, like the practice management solution oftentimes is also the EHR, and that tends to be both. And so these types of companies have an unfair right to sell that next incremental product, including AI, right? And including an AI transcription tool, including an AI feature or another point solution. And so our belief is that as long as the founders and CEOs of these control point companies are progressive around AI, they're really leaning into the opportunity, understanding the capabilities of these new technologies, taking advantage of the hundreds of billions of VC dollars
Yes.
that are funding into OpenAI and Anthropic.
Yep.
They will have they will be well positioned to offer some of these solutions, right? And so that's something that we've believed over the last 2 years. And so we started looking at this in 2023, pulled up again 2024, and then have published a series of essays this year to really unpack what's going on. And so our initial thought was, and I think this still reigns true, is the content businesses may be significantly challenged because these LLMs, they suck up a lot of these contents and they can superset a lot of these small niche data or content providers. And so unless you can build real walls, which is very hard to do, those
Mhm.
business models may be in trouble. Horizontal point solutions, likewise, if you have a different UI or you have a different engagement layer because of Gen AI technologies, like that can be actually really challenging. But these multi-product control point solutions, they probably have more opportunity than threat. And so that's been our general thesis. Now, as we think about where the threat will come and also where the opportunity comes, there's really kind of two types of vectors that we're seeing in terms of real threats. In general, let me start with the basics, which is most of the time, point solutions compete with suites on the basis of functionality and let's call it like a magical customer experience. That's not necessarily because the product does something that different than the last product, but just a lot easier to use, easier to try.
Yeah.
It makes it more joyful and
Mhm.
delightful to use, right? So that's how point solutions compete with suites. They find a way of having a really compelling wedge, and then over time, they integrate into the suite and then hopefully surround it, right? Certainly in vertical SaaS, that's been the case for many, many years. And so that's also true with native AI solutions. They are trying to find a compelling wedge, a great
Mhm.
initial point solution, and then subsume the existing incumbent control points. And the two vectors of wedges we see are either what we've labeled kind of hero users or cousin Richie problems. So let me unpack those two separately. In terms of hero users, in some organizations they'll have hero users, and hero users are what it sounds like. These are people that have a little bit more sort of sway politically. They can make decisions around a number of different aspects. And importantly, in this framework, they can buy their own software. And
Yeah.
so in mental health, for example, it's the mental health practitioner.
Yeah.
She has a choice of downloading a transcription tool off the web or on her phone, and basically starting to use it. And if it helps her with her key issue, which is taking notes at the end of a very long day, and automates the transcription and then also maybe some recommendations. Well, of course, if it's easy to try, if it's easy to use, it's easy to buy, she's going to buy that product, and you're going
And
to
tell
see
her
it
friends.
and tell her friends, right? That's the interesting part here. Like maybe to unpack this hero user use case, it's a user with a lot of agency. It's a very influential user. It's a user that's influential not only in their end organization, but multiple organizations. The product that you're offering isn't just something to run your business. It's actually to help you do the work, help you do the hero's work and automate a lot of the administrative work that the hero doesn't want to do. It's a product that they can buy very easily. They can try very easily. They can download it onto their phone. They can put in a credit card and buy it very quickly. And that's a really dangerous wedge for a lot of control points because that wedge can grow very, very quickly. It can get mass adoption in your end user base. If you're the incumbent control point, a lot of your users can start using this little tool, and that tool, based on the power of their users, can force integration into the control point. And so, because
And
you have,
an example of that
yeah,
is all this transcription software that's going on out there. The pain in the butt of updating the CRM or the ERP or the, practice management tool, this transcription software for mental health professionals or contractors and everything that just listens and then does stuff and schedules the follow-up and starts the order and so forth. That's magic and time-saving. It's life-changing for people on the front lines doing this kind of thing. And, they're frustrated with their damn CRMs and ERPs because of that updating, for example.
100%. And many times labor is super scarce, and actually transcription, note taking is a source of burnout. And so
Yes.
you're seeing very strong adoption across these tools. Now, these tools you could argue are just a wrapper and an OpenAI. So what, right? Who cares? They're providing value to their customers. And so the dangerous part is once they've integrated into the control point, then they can not only update notes and sync as you described, but they can also start to take action. Well, then now that tool, which you could argue is fairly flimsy and trivial, that's where the hero users are engaged. That's where they're taking action. That tool has an unfair right to cross-sell other downstream
Because it's an
applications.
amazing experience and incredible ROI. I saved 3 hours today, with the first time they've said that in 20 years.
That's right. First time they actually love their product. And it's helping them do their heroes work and automating the administrative stuff they don't have to do. Right. And so that's one way. And so as a incumbent control point, you have to be very careful. You have to think about building products for your hero users. There's a number of different ways you can defend against this, but that is an opening. The second opening is what we call cousin Richie problems, which is in your, and these are overlapping, but in a lot of industries, there aren't hero users. There's certainly users that are heroes, but they're not hero users in the sense that they can't choose their software. So the chef, as great as she is, she cannot choose the point of sale system that the restaurant uses, right? Unless she's the owner, right? And at times she is. But there you're back into classic vertical SaaS where you're selling to the business owner. And so that's a little harder, right? Because you don't have this new vector, this new opening to go chase the hero user, but you can still actually land wedges in a lot of volume and force that same integrate and surround approach. And here there's a separate set of problems that we look for, which is again what we call the cousin Richie problems. And these are things of like lay out your top problems that you do poorly, right? There's a lot of like kind of eat your broccoli type of problems that small businesses face where they know that's super important, but they just don't have time to do it, or they put their idiot cousin Richie on it, right? Their idiot cousin Richie is their cousin that they don't really want to employ, but he's family, so you gotta give him something to do, and you stick them on that. And that can be appointment setting, it can be updating the website, it can be reconciliation. These oftentimes really high stakes, sometimes they lead to revenue type tasks that either they outsource internally to the idiot cousin Richie, or they outsource externally to third party, either local agencies or offshore agencies. And so if you look at those class of problems, and then you look at where Gen AI is really powerful, it's in interactive conversations, QA, right? It's in multi-stakeholder communications. It's in non-deterministic workflows. Like that's what the technology is really good at. You take those technologies, you apply them to certain cousin Richie problems, and you have an agent that really outperforms every single cousin Richie out there at a much lower cost and much lower overhead, right? You don't have to actually worry that your agent's not going to show up in the morning, right? You don't have to worry that, cousin Richie only speaks one language and not very well. Your agent can speak, every single language that your customer wants to engage in. They can work 24/7, that type of thing. And so there's a number of these cousin Richie problems that we're starting to see in the world that are seeing real products being built. This isn't just like, hey, AI is great. It's like solving these really key, high stakes, high impact problems for these small businesses in various different verticals. And we think that's really exciting.
This podcast is brought to you by my friends at Designly. If you're a non-technical founder with an up and running SaaS business, but your first product and dev partner aren't keeping up, it's time to check out Designly. Designly understands the pains you're experiencing right now. Dev leaders who speak in jargon and put you off, MVPs that went live and face technical problems and UX issues, and missed expectations all around. Designly's mission is to help non-technical software founders build great products with clarity, confidence, and peace of mind by serving as your fully outsourced engineering team. Designly becomes your trusted product partner, working with you every week as your dedicated team. They have partnered with over 200 non-technical and practical founders in the last 12 years. Designly knows how to turn that crazy product stress into calm and successful software launches. Check out their success stories from founders like you who've been there. It all starts with a free 1-week audit where they review your product's code, design, and roadmap to uncover what's working, what's broken, and what's next. Check out designly.co/practical. That's designli.co/practical to talk to them and see how they can help you move faster and sleep better. Well, one of the things that like taking away not just things that software could do easily, but people did in various ways, outsourced and somebody else in the building doing it. But there's all kinds of stuff, especially small businesses, don't get to because they don't have the help and they don't have the smarts and they don't have automation and so forth. And there's a whole bunch of work that's going to be done that's valuable that wasn't on anybody's list. There's a whole new market I'm seeing in some of that. So systems of record, up and running companies, the new systems of action, AI first upstarts call those the legacy incumbents, right? And they're trying to surround and get in. And if you become the front end, you have the opportunity to sell the rest of it. That's a very useful way of looking at it. Does that really mean that everybody ought to be headed towards systems of action before somebody else takes it? That's the opportunity and the threat?
Look, I think we're still early in this evolution, and it might be a very fast evolution, candidly, and that's the threat here. But if I were in your audience and had worked really hard to build this great software business over 5, 10, 15,
runs
20
an
years,
auto shop, runs a dermatology office, runs an emergency medical service, the fire station.
Yeah, you've worked too hard to put it at risk. Like, I take this threat very seriously. And so I think 100% I take this threat very seriously. I think about some of the open flanks that I just described. Like, do that analysis on your own business. Who are your hero users? What are your cousin Richie problems that are done poorly or not done at all or done by others? And think through that from a very tactical product management standpoint. I think about being careful about how you integrate with some of these new native AI tools and think through really which ones could be your competitors over time and how do you want to pass on data or how you want to integrate into workflows. There's lots of different nuances in terms of how you can deliver value to the customer without giving up your data taxonomy to a potential competitor, how to, giving up free license to your workflows to a potential competitor. I think there's also an organizational change and mindset that I think is required, which is if the founder and CEO, she's taking it seriously, she's got to really push it down to her teammates. And you really want to have your L1 executives push you on AI rather than the other way around. You want them leading in their own functional area because, as a CEO, as a founder, you just don't have time to do everything and you can't be educating your L1s. They have to be educating you. There's a number of, actually, we're about to publish a framework of the control point founder's guide to how to engage with agentic solutions and make it a opportunity for you rather than a threat. And maybe like that's the last thing I'll comment on. We can go deep on any one of these pieces, but it is a real opportunity. It's a real opportunity for, very tangibly, which is you can start doing work for your customers. You can have ARPUs that are 2 to 5x the current rate. So big revenue opportunity. You can field because you own the entire workflow. You can field multiple agents. And so you could have this is a way of really amping up your multi-product platform strategy. The other piece that's really interesting to me over time is I have this concept of an industry platform where if you think about multiple stakeholders in the same industry, integrating at the workflow level, at the payments level, at the data level, at the UI level. And so these agents allow you, particularly on the data and the workflow side, to start building industry platforms and industry ledgers in a much faster way than traditional SaaS is required. And so you can use these more analog communication channels with agents on top to basically communicate across stakeholders in a digital way. So I think there's really exciting and powerful opportunity for incumbent control points that really lean into this.
That's awesome. Are you seeing the same thing I'm seeing with regulated industries, financial services, healthcare, that they can't play the same games? They have to be very sensitive about the data. There's a
Yeah,
lot of hesitancy in misperception about it, and they're a lot less eager to consume AI features, the customers are.
yeah.
Are you seeing in a lot of different industries, are you seeing some industries moving faster than others for all those reasons?
Yeah, Greg, let me start with regulated, and I'll address the
Yeah,
faster moving ones. But the regulated industries is super interesting to me.
yeah,
It's interesting because you're right, for all the same reasons that companies are reluctant to move quickly on this stuff because there's really high stakes and there's penalties and there's reputational damage. They've also oftentimes really standardized data. For example, the EHRs in many fields are regulated to offer access to third parties. And so if you're a point solution that's integrated into some of these HRs, you're actually benefited from it. The taxonomy is better organized. Of course, the sensitivity of handling that data is also higher. So there's higher stakes, but there's really interesting AI opportunities in the regulated industries, in my opinion. And it's one of these, like, I think, aligned to your ethos, which is grow pragmatically, which is don't grow so fast that you burn through your reputation by
yeah,
putting out half-baked products. You
yeah,
can grow more slowly, earn trust, and build very, very big businesses over time. So I think that that all is quite interesting to us. I think the other aspect that's super interesting, and this is like kind of obvious comments, but any type of knowledge work is adopting AI just so quickly. Our
yeah,
field, the investment field, our business, Tidemark, has been transformed by AI over the last
yeah,
6 months, let alone 12 months and 24 months. Legal, accounting, all these fields, they're really looking at AI as a tool to sometimes substitute around the margins, but oftentimes to really augment and really empower the businesses that are in those industries. And so I think those are some of the fastest adopting industries. It's pretty cool to see.
yeah. One of the things that's new for a lot of practical founders that are in my groups I work with is they've been selling established software, dental practice management. Every dental office has it, and the calendar reminders. It used to be new. It's not new anymore. It's an established category. And then they have new AI features, practical and useful, but then they have to go play that old product adoption game that only 10% of their customers buy the first round, and then there's another 10% and other people are waiting, and right, we're kind of haven't played this curve, working the curve,
Yeah.
and finding the early adopters and not selling it to everybody and, restraining it. So there's a new level of adoption. And I've seen it both ways. Our customers don't want AI stuff. And then 10 minutes later, they're like, that's magic. I'll take it. Right. And then it goes faster because it's
Yeah.
so amazing. So, are you seeing anything in the adoption trends? Because we
Yeah.
can build all this cool stuff now,
Yeah.
but are SMB and enterprise customers asking for it, using it, getting value from it?
Yeah, yeah, 100%. So, yeah, I think you've touched on a couple really powerful concepts here that I want to tease out. Number one, I feel like the potential of how you merchandise a new product
Yeah.
is always important, right? That's a really hard thing to do from go single product to multi-product, but it's really important. And particularly with a new kind of a tool or a new category, you need to take on much more PLG concepts where you can see value very, very quickly. You can use the product very, very quickly. Sometimes it's embedded in your existing workflow. Oftentimes it's embedded in your existing workflow. It just shows up as something that helps you. And so one of the sessions that we've hosted recently is Kevin Hamilton, the former CMO of Toast, has talked about building PLG motions within a traditional sales go-to-market. But I think how you present these new AI tools is really powerful. I think the other piece is, as you think about company formation, you build one product, you scale it, and then in order to fund the next product, you actually have to take resources out of your first product into the second product. And that can be very hard to do, right? And it also can be very hard to do if you don't have outside capital. And so that's always been a little bit of the dilemma in terms of raising capital or not, which is software businesses are very profitable, and you can very methodically build one product after another. You can go land one customer after another and hire sales reps incrementally and do it self-finance. And that is the way some of the best software companies have been built. on the flip side, in this time where control points are being reset, where this native AI tools can become the system of action, we're starting to see more and more self-financed companies want to raise external capital and also bring on external expertise to help get to power through some of those transitions, because you don't have 5 to 10 years to
Yes.
figure this out. You have maybe a year to 2 years as a window
Yes.
where you really
Yes.
have to capture that system of action. So there's lots in here. Which, look, there's been a shift to SaaS, from client server to SaaS, from desktop to mobile. There's a lot of these like multi-threaded sort of transitions you have to make as a software company to get to the promised land and to build a great business, and to continue to maintain a great business. And that's true here. It's happening a lot faster than in other transitions that I've seen.
Yeah, and most of the founders who were, let's say, under 40s, who didn't live through the transitions of the 90s and of DOS to Windows and Windows to, Windows 95 and Web 1.0 and 2.0, they're not used to these. You got to get to the other side of the tech wave or you're toast, so to speak. And I think practical founders are everywhere are saying, I got to move. There's very few that are skeptical, not moving, not making progress. And others are, escalating their attention and focus really quickly. When you say multi-product, right? So if you get your one product, you're focused and it wins, you get to 10 million, you get some market share. But to get to 20, 50, 100 million, you got to have more of a product line, so to speak, not just a single product. Does that mean like practice management and then add on things you sell around it, the payments, the extra features for this and components? Is that what you're talking about, multi-product, filling out your suite, or is it
Yeah.
really another side product or something
Well,
like that?
there are many different ways to build multiple products. It's hard. So we
Yes.
did this longitudinal study of public software companies, and the only reason why we used public companies is there's lots of data there.
Yeah, you
But
can see it. Yeah.
only like 24% of public software companies actually built more than one product. It's very hard, right? Because you have to build two product organizations, two go-to-market organizations.
Oh my
Those
gosh. Yeah.
organizations have to compete for resources and time from each other, blah, blah, blah. Everybody on this call kind of knows that. The thing that we love about vertical SaaS companies, and particularly control points, is that it's as you described, which is you're following the workflow, you're following the money, you're building on the single source of truth, where that incremental product really benefits from your prior product, and one plus
Yeah.
one equals five. The former CEO of Toast, Chris Comparado, describes it as better together, and one
Yeah.
plus one equals five, and he charged 1.5. So the company's getting great
Yeah.
value, customers getting great value in terms of dollars as well as impact. So
Right.
that's the thing that we really like.
Are you starting to see in your portfolio companies, we used to say first it's market share in verticals and then it's share of wallet, right? Sell them more things, right?
Yeah.
When you've penetrated enough, you sell them more things. Are you starting to see the potential of AI to say, well, we can only sell $1 worth of software and then 50 cents worth of the add-ons, but I could sell $4 worth of get stuff done for them that they used to have labor or offshoring or other things or stuff they didn't do. Are you starting to see that we're monetizing differently when we're replacing work?
Yeah,
Or
100%.
traditional software? Yeah.
There's I'd say it's a barbell, to be honest. Like
Yes.
there are a handful of examples where companies are getting 2 to 5x what they got on a software seat in terms of outcome-based pricing. And
Yeah.
arguably, they're only getting started because the outcomes that they're measuring are relatively low value, and they can increase the value of the outcomes and price
Yeah.
accordingly. And that has to do with real hard dollar ROI that's measurable, oftentimes associated with revenue. And the second is lack of competition, right? Because you can add a lot of value to
Yeah.
your customers, but you can't necessarily always charge for that unless there's not a lot of competition vying for the same thing. So
Yeah.
that's definitely the case. And then there are other groups of companies that are adding value, but it's not as dramatic. And so they're actually bundling that into their higher tiers of solutions. And so they aren't really directly monetizing it. And that I think is not necessarily a contraindicator of the value of AI. It's just perhaps a sign of a company that's early in their in their development of the AI application, really building in truly impactful products that are solving specific jobs rather than doing general summarization. Not to say summarization is
Yeah,
not
yeah.
valuable, but
Not really.
some of the
Yeah,
more sort of Gen 1 type of functionalities.
yeah. Well, uh, traditional VC investors, Silicon Valley style, don't like too much service in the business. They don't fund the tech-enabled service that are, a software and then people that do stuff, the done for you game, right? Times 100 or 500 or whatever, right? We'll do it for you. But now software can do it for you, like on the margin. Some things. We're starting that game. And the problem was the old margins. If you had 1,000 people building people's websites or something like that on the margin on your tool, it wasn't the same as software margins, and you had to deal with 1,000 people. But now AI can do that. Let's talk about cost.
Yeah.
I mean, are any of your companies starting to show up as, see those tokens bills, the cost of that AI processing, deep thinking is
Yeah.
not free, like AWS is virtually. So are people figuring at scale, figuring out the cost issues and managing that and navigating that?
Yeah. So I think you're touching on a couple of really interesting things, Greg. So both in terms of the margins of AI products as well as the service orientation. So,
Yeah.
on the margin, to answer your question directly, on the margin side, AI native products tend to have lower gross margins because the higher
Yes.
cost of goods to GPUs are so expensive and that flows through the infrastructure providers and so on and so forth. And I think
Yep.
that's true. I think maybe back to my prior comment, I think the cost of goods is on a monotonic decline, and so the question is whether you can maintain pricing in order to expand margins.
Ah, okay. There
And
we go.
and
Yeah.
and I think that comes back to this idea of pricing power, which,
Yeah.
how much value you're offering for your clients, how sticky are you, what's the competitive set like, how fungible are your products. And so I think there will be a handful of products will be very thin margin AI products because they don't add enough value and they're heavily competed. And then others that look like software, if not higher than software. So I think
Right.
that's it's kind of classic depends, but I think that's the
Yeah.
framework
Yeah.
of how I
That's
think
good.
about it. The second piece is actually VCs will just follow heat in action, and I respect that, right? That's the best signal that something's happening.
Yeah.
But actually, a lot of the native AI companies are pretty service intensive. And the reason why is because the software can't do everything yet. And so there's, maybe the more objective way of thinking about it, first principle ways of thinking about it is AI can only automate certain tasks. And when you map
True.
those tasks to people, they don't line up one to one. And
Yeah.
so you have these sort of unfinished tasks. And you either have a practice management solution like a Carbon or Clio that can very discreetly match a task to either AI or people and run a business that way, or you got to have almost like a managed service provider orientation. So there's a lot of venture.
A person manager of your agents,
You got it.
right?
And so you have a lot of these native AI companies that actually are very, very search intensive. People call them forward deployed engineers or on the back
Oh,
end
right.
actually delivering the service. And
Yes.
so the promise there, and then there's nothing wrong with it. The promise there is a couple things. Number one, if you're actually doing the work alongside the AI, you can train the AI much more quickly. And I think
Yeah.
there's some real validity there because software workflows only capture very explicit workflows and very explicit
Yeah.
context. There you can pick up a lot of informal context and build it into your software. The second thing is over time, hopefully AI allows you to start taking out more and more people so your margins start looking like software over time. And so VCs are kind of inherently forward-looking actors. And I think that's great. And so they're saying like, hey, this thing's only like a 30-40% gross margin business now. We think we can get this up to 75% gross margin based on the ability to start substituting out people with software over time. And that's a bet. It can actually play out in certain circumstances and be great. Other circumstances it cannot play out, and in which case you have a services business that you way overpaid for. So that's kind of that's the business. That's the bet that they're making. And to some extent we're making at times.
Yeah, Jason Lemkin wrote about this at SaaStr on his blog today. If you have 999 agents running 24/7, it creates a lot of work for people to do, to sort through all the research it's done and, the leads it's scored and so forth. So Vincent Serpico, who spoke as an AI expert at our Practical Founders Summit 2 weeks ago, his first distinction was agents. You should think of agents more like labor as than software, right? So it's a whole with different kind of training and the business impact and so forth. That was a very powerful statement there. So thinking about competition, you would imagine that an incumbent that has the data and owns the workflow has some unusual advantage to create systems of actions, get things done, agentic software that depend on all that unique data that probably not everybody has access to. Are you seeing the legacy vertical incumbents, sleeping giants waking up with AI and doing that? Or is it the fast moving tiny teams that are going to move faster?
Well, I'm seeing two things that don't actually reconcile. One is
Okay. Yeah. Okay.
one is like, and Greg, you've been part of a number of different companies. I've served on a lot of boards,
Yeah.
and like, man, it takes much longer than you would think. Companies like big companies with a lot of resources do really move slow, and it's kind of frustrating to everybody. And
Yeah.
so there can be a big burn
Careful
in.
what you ask for. I want to be big, and then that's
Yeah.
fine.
Yeah, there's a long burn in, and all of a sudden things really start to hit. And so on the flip side, we are starting to see in our portfolio and other companies things starting to hit where agents are being launched, they're being sold at good monetization and growing really fast. And so kind of both are happening. And so what I would say is that if I were to draw a pattern, it really comes down to the leader. The leader really has engaged deeply in both the threat and the opportunity. They've engaged deeply, and sometimes they're not necessarily technical in nature, but
Yeah.
what the frontier of the technology can do and what it does for their customers. And regardless of scale of organization, that's what's driving the answer. That's what's driving real impact. And some of that impact can be acquisition. Some of our companies have gone out and bought native AI companies, and we really like this idea of integrating running the business with doing the work, and integrating doing the work into the business, into the workflow of the business. And so there's some really powerful synergies there. But it's early. Like I think it's still pretty early. We are seeing some good progress though.
So, as an active growth equity investor, investing in these practical companies that can grow and scale, become the center of activity in their markets, industry leaders in the center of activity, is how you're betting changing with AI? Okay, everything has AI, but you're still betting on growing serious companies that have a structural advantage, system of record, system of action that will grow relatively capitally efficiently
Yeah.
and someday sell to pay back your investors. That's your game. Are you handicapping any of those differently now that there's AI and the future is less certain, but maybe more exciting?
I think I think your last comment is probably the only thing that might be different, which is the bounds of outcome are much wider. And so
Ah,
a lot more upside. There is some existential risk in certain categories. And so you
yeah,
got to make sure you're playing in the right category. So I think
I see.
that's probably different. But I think in some ways the core business is exactly the same, which is it's product, you know, traditional SaaS and AI, both are product, like making the right product bets, funding the right product bets, and it's execution. And so as part of both those, we as a firm, as a small investment firm, we've actually fielded a number of bespoke studies on agentic extension, AI and operations. We've done a number of private community sessions around both to be cutting edge on that and help our
Yeah.
companies grow in the right way. But ultimately, it's building the best product. It's executing in the most effective and efficient way. That's what drives leadership, and that's what we're trying to do. We're trying to invest in and help grow the next category leaders. And AI just makes it. We have to be smart on the domain. We have to be deep on the
Yeah.
domain. We have to take it seriously and get into it. But ultimately, the bets are the same. It's just higher risk, maybe higher return.
Yeah. It's an exciting time. I mean, it's we live for these kind of like open field big runs that don't take too much capital to pay off. So you've invested in Jane, which is an EHR for chiropractic and others, and OnFly, a travel software business, AgVend this year. Do they have I mean, a clear AI strategy that says, "Here's where we are, here's where we're going," or, you know, did you invest in them because they're smart and they have a potential to leverage it?
Yeah, 100%. A big part of what we do ultimately is we try and find great founders. And I'd say with all three of those companies and all the companies in our portfolio, big conviction. And so part of this is as an investor, you're trying to understand the market structure, the technology frontier, and what customers want. You're also trying to find great stewards of your capital that you can work with to help, twist and turn as the market changes, right? Like if as new models come out, there'll be new rules of engagement, there'll be new battlegrounds. And so part of it is you make the best assessment on what you know, and then you also want to partner with great people. So yeah, each one of those companies and all of our companies do have a very robust AI strategy. Sometimes it's an opportunity to really expand products that they provide to their end customers and really change the relationships of how they engage with their customers. Sometimes it's dramatically changing the cost structure of how they do their business. And sometimes it's both. So yeah, each one of them
Yeah,
has a very robust strategy.
yeah. Do you think there's the new mode is whatever, the smarts and the speed to leverage all of this in valuable and strategic ways that, 2 years from now, we can't really predict? It's that, great founders will find a way versus the old moats of legacy, sticky, can never leave, data gravity, as you say.
Yeah.
Are the moats any different looking forward?
I think the importance of some of these moats have increased a lot. And so
Ah,
there's certain workflows and there's certain systems that I think are much better positioned to face competition from the AI tools and also extend into agentic solutions. We just went through a brainstorming session based on like we've been going hard at this for a couple years now on what are the attributes of this of systems of record and system of engagement that are really well positioned for agentic solutions. And the nice part is you're starting to see
ah,
real applications, real
yes.
revenue, and real proof
Mhm.
points around this. So I think we just have to get tighter in terms of how we think about investing. There is like this the traditional growth equity investor has been really financially driven, to be honest, and so I think
Right,
this
in the compounding machine, right? It's up and running, it'll continue to be up and running, and we'll
it's
take
like
it to the next level. Yes.
buys in motion, stay in motion. What's your GRR? What's your
Yes,
NRR?
uh-huh.
What's your margin? What's your CAC payback? It's pretty simple, actually. And what I love about AI is it really has increased the threshold of product savviness. Like a growth equity
Ah,
investor has to
yes.
has a point of view. They can't just be looking for a financial profile. And I think that that's going to be really challenging for a lot of our competitors. And I think we have to get better every day. But I think we're really well positioned for that. So I'm pretty excited about it.
Yeah, the kind of, either, quote, "simple but hard" compounding
Yeah.
or the brute force, add money to it to go faster, those are still there in some way, but that super savvy to say, this summer, based on all the tools and what we've tried and our experiments and this is what's working, and it is non-trivial to get through that. It isn't just ask somebody which tool to use and have a junior person figure it out. It's like founder level sophistication in many cases to understand the nuance and how it fits together with the business. So, at least right now, we're kind of back on the frontier and that intense frontier mentality of figuring it out. I think that's an advantage for practical founders. It isn't just brute force; it's this intense frontline focus that can win and do it pretty efficiently. We're seeing founders do amazing things that, I don't know, 3 or 4 years ago, you needed $100 million to
Yeah.
raise, but now you can do it with 2, engineers on any of the, on Google AI, platform, something coming through. So
Yeah.
it's pretty
And
impressive.
and I think you've highlighted this in the past in a really compelling way, which is patience is also a great asset,
Yes.
which is like take the time to actually figure it out before you try and go slow a little bit before you go super fast. And so I
Yeah.
think without the pressure of external
Yeah.
financing, a lot of your founders have that advantage. So
Yeah.
fully agree.
Great. Well, it's an exciting time, for practical founders out there and the ones, getting started and the ones, scaling up. So, Dave, what other thoughts do you have for practical founders as we're headed towards the end of 2025, towards 2026? I bet you're seeing all those 2026 plans coming through now. Um, what should practical founders be thinking about? And, from what you've seen, what should they be doing that they may not have top of list yet?
Well, I think we're going through this with all of our portfolio companies, and in terms of thinking about priorities for 2026, I would say there's a lot new that happened over this year and last year in terms of new product opportunities, new technology I get smart on, all sorts of new distribution models,
Yeah.
AI and operations, all that other stuff. The thing that I've found most useful for our portfolio companies is really try and take some time away from the business, like 1 or 2 days, and think about what are the 3 or 4 North Star, not metrics, but goals that you have for next year. Um, some of them may incorporate AI, whatever it is. It's I think now with all the moving pieces, where clarity is so much more at a premium. And so really lay that out, really think through them deeply, and really push yourself and your team around which are the 3 or 4, and then resource them. I do think right now is a really dynamic time.
Yeah.
You do need to get ahead of some of these native AI competitors and some of these new opportunities. And so, kind of go deeper in fewer situations would be my high level advice.
Well, so a lot of shiny objects going around in AI, simple AI. We're going to do AI, and we do lots of AI. Won't save you next year. So that the smarts of where to apply it and what other things are important in your business to focus on. So, growth equity funded founders and practical founder bootstrappers, they don't have unlimited resources, and they shouldn't. What are the big things that need to happen, and how should you think about that? That's the important thing that people should be thinking about right now. I could see even in my own business how a lot of shiny objects, all the things that are possible, what I could do with practical founders next year, but it's back to the same kind of priorities, and it'll be a different game. Yeah, Dave, do you think we go through this exponential improvement, and it starts to pick up speed? Will business and our economy look fundamentally different in 5 to 10 years?
I think that's a really tough question. 5 years is a long period of time. I would say just maybe I'll reflect on our business, and maybe that's where investment business is ultimately is sort of an extreme version of a knowledge worker business. I
Mhm.
would say that it will be very, very different. I think information aggregation, information synthesis will be that much faster and cheaper. And so what it will really require is agency and experience. I think we're already starting to see it from the beginning this year to now, how different our operations are, how how much faster and how much better we can triage situations. And I think that's just the start. We still have a lot of work to do in terms of data integration, in terms of applying AI endemic into our workflows. But man, it's made a huge difference, and that's probably the most acute change I've seen in my investing career, which is 20 years plus. And
Oh,
so
uh-huh.
I think 5 years from now, what we'll do as investors is probably pretty similar. How we do it and with whom will be, I think, quite different. So I think
Oh.
for knowledge workers, 100%, it'll be quite different.
Exciting times. Thanks for the update, Dave. Good to see you. And founders can find out about the Vertical SaaS, VSaaS Collective Live conference that's happening in San Francisco on November 5th at tidemarkcap.com. And we'll have the links in the show notes there. Thanks for the update on what's happening with AI in practical founderland.
Of course. Great to talk to you, Greg. Take care.
Thanks, Dave. Thanks for watching this week's interview on the Practical Founders podcast. Be sure to like this episode and subscribe to the Practical Founders YouTube channel to keep up with my weekly in-depth interviews with serious software founders who are building valuable software companies without big funding. You can check out my blog, all the podcast episodes, and information about my Practical Founders CEO peer groups at practicalfounders.com, or message me on LinkedIn if you'd like to connect. See you next week.